right, the market down about 149 points right now. We've got famed economist, market watcher, everything watcher, Mark Zandi, one of the smartest guys I know in the financial community. And I know quite a few smart guys. Very good to have you, Mark.
Nice. Have me more often.
There we go. There we go. What do you make of what the president is saying right now about the likelihood of passing tax cuts? He still thinks these dust-ups with Senators Flake and Corker notwithstanding, he's going to get them passed. Will he?
It's going to be tough. You know, it's 50-50. I can see this going either way. I mean, the Republicans need something. They've been running on tax cuts, so that says, yeah, they'll get it done. But on the other hand, they can't figure out how to pay for tax cuts. And you've got folks like Corker. There's a camp that says we don't need to. Folks like Corker says we do need to. Yeah, I mean, you know, you can get pretty. You have to get pretty close, right? I mean, you can't have this huge deficit finance tax cut. I just think you're not going to get enough votes to pass that. So, you know, I'm confused. I could see this going either way.
All right. Now, I know you're separate from the Moody's ratings folks, but if they see a deal here that doesn't add up, is there a possibility that our nation's debt is downgraded?
It depends on what the deal is, right? I mean, if they got exactly the Republican plan that was unveiled three weeks ago, that was, as I recall, that was $2.5 trillion static over 10 years. That's a pretty big. That adds, 10 percentage points to debt to GDP. That they might take a good look at the rating at that point for sure. I would think. And
that's separate from you. I
have no input into that process.
Right.
Yeah.
But I do want to get your thought. As an economist, I mean, the supply side argument for tax cuts is that the bigger, the better. The more powerful, more impact. That if you're going to start, nickel and diming paying for them and equating them with spending on a program, they're never going to do the job. What do you think?
I think lowering marginal tax rates is a great idea. Corporate, in particular, I think that adds juice to the economy. I think that's key to getting long-term growth up. But you have to roughly pay for it. Yeah. So lower marginal rates.
So you don't buy the dynamic scoring that goes into this?
In part, you have to be close, though. I mean, go back to that Republican plan, $2.5 trillion over 10 on a static basis. That's not even close, right? So you're going to get bigger deficits in debt, higher interest rates. So
but what Treasury Secretary Mnuchin, I think, Mark had said, look, you get the growth up to an average of 3% from 2%. That's $2.5 trillion over 10.
But it won't happen.
Why don't you say it won't happen?
Because you need to be closer on a static basis to get that lift. But
we have had periods we've had sustained growth of at least that, right? So do you think we could get ever back to that, and that this is the elixir?
To 3%?
Yeah.
The only way to get there is more immigration, not through.
Interesting.
Yeah, that's the fastest way, the clearest way to get back to 3% growth on a sustained basis. Lower tax rates is a good idea, but that won't get you back there very quickly. And it's certainly not back to 3%.
What about tax forgiveness for a lot of companies that hold trillions abroad? I guess it depends on what they do with that money. Yeah,
well, it's a great idea if you go from a global corporate system to a territorial system. You need to reform that so you get fewer inversions and spending less money on tax avoidance. That's all a great idea. But, we did this. Remember, Bush did this back in 2003-04. So there's a lot of good academic studies that went back and took a look. And there's no evidence that it significantly lifted growth.
But there are others who argue it got a country that was dipping into a recession, a shallow recession at that. You don't buy that?
No. There's no evidence that added anything to growth. Look, these big corporations Moody's is a good example. There's a lot of cash overseas, but it's fungible, right? I mean, it's easy to get cash here. You can go into the bond market and, borrow it 100 years at a few basis points. So it's not like if you can bring cash over, it's going to make a big deal in terms of the investment, hiring, expanding that you would expect here. So no, there's really no evidence of that whatsoever. Now, it's a good idea to do it, right? Because you put a tax rate on it, and you generate some revenue, and they can use that to lower marginal rates. So I'm all for it. But if you're counting on that to juice growth, you're just going to be mistaken.
All right. Well, watch closely, Mark Zandi. Thank you. All this breaking news, we appreciate it.